Well, holy Roma, this is going to have some far-reaching consequences for the marketplace, whether it's stocks, bonds, real estate, it doesn't matter. House Speaker Nancy Pelosi just initiated impeachment proceedings against Donald Trump. Now, it's obviously still very early in the process, but we have not seen something like this since 1998 when Bill Clinton's impeachment was initiated. Now, he was later acquitted, but we're gonna go through and find out what happened in prior impeachments in terms of how the market reacted, what should we expect now, how is this going to affect the China trade war negotiation, how should you be investing in real estate and stocks, and what should you be investing in right now? Oh my gosh, there's a lot to cover, because after all, this is the Meet Kevin Report, where I report news that makes you money. But first things first, I just have to give you a quick 15-second note with a few disclaimers. Number one, no, this is not designed to be political. I'm not trying to take the left side or the right side. I just care about helping you make money. Number two, I'll be in Miami on October 12th, helping you learn how to make money. Check out that link below. And three, huge shout out to Miranda Dennis for her unsolicited feedback about my real estate investing course, where she was initially skeptical and worried that she would just find things she could find on Google, but when she joined the course, she realized there was way more to be learned. Remember, that coupon code below expires September 30th. All right, now let's talk about the impeachment. First things first, what happened here? Well, let's give you a very quick primer on this. Allegedly, around the same time, Donald Trump was freezing about $391 million of aid to Ukraine, according to the New York Times. Donald Trump allegedly had a conversation with powerful people over in Ukraine and said, hey, you folks might want to check out Joe Biden's son for some possible ethical violations or some shadiness. Now, in case you don't know, while Joe Biden was vice president, his son, Hunter Biden, had a role in some kind of Ukrainian gas company and allegedly, according to Business Insider, was paid upwards of $50,000 per month for whatever role he was doing there. Now, it's important to keep in mind that a lot of this is still very uncertain. We're not sure. Did Donald Trump freeze funding at the same time as sort of leverage to get Ukraine to investigate Joe Biden's son? What was Biden's role at this Ukrainian gas company? And what is the impact of all of this anyway? Well, the impact is what I'm most interested in talking about, because when the impeachment was first announced, the Dow Jones promptly dropped almost 5%, according to Reuters. Yet, the stock rebounded after Donald Trump said, hey, you know what? Let's just release the not only whistleblower report related to this, but let's also release the transcript of the phone call that happened. Now, this is all pending. We haven't seen these reports yet, but these are still going to be very interesting when they finally get released. After these Trump tweets saying, hey, you know what, we're just gonna put everything out there, the Dow and S&P did quickly recover. Now, both of them did end slightly down, just under 1%. Amazon leading the fall of the S&P, dropping a little over 2%. However, Nike did very well, with their stock jumping over 5% after hours as they beat analysts' expectations in their earnings call. I think it's safe to say that we already saw the start to some potential volatility that could be coming out of this impeachment process. Now, what exactly is the impeachment process? Well, let's make this also as simple as possible. Here's a graph from the New York Times, which says that first, the investigation begins within committees, and then the House can decide if they want to hold a vote to actually impeach the president. It's important to note that impeaching the president just means to bring about a trial. It doesn't actually mean he's out. The House needs 220 votes to officially impeach Donald Trump, and 190 members, according to the New York Times, have already indicated their willingness to impeach Trump. And that's before all of these reports come out, which could be good for Trump or they could be bad for Trump. We'll see. Now, if the House does vote to impeach Donald Trump, then the impeachment process goes on over to the Senate, which what's interesting about the Senate is it's controlled by Republicans. What that means is there's a potential absolutely nothing will happen when the impeachment process gets to the Senate. In fact, Senate Majority Leader Mitch McConnell could literally sit on the trial and never bring it to the floor of the Senate. That is, of course, unless our Chief Justice John Roberts swoops into the Senate to take control of this trial and actually bring it to the floor. Although there's no real rule that, at least in my research, I was able to find that said, hey, yep, it's gonna be Chief Justice John Roberts or it's Mitch McConnell. It seems like these are pretty unclear and untested waters. But now, even if the Senate decides to hold a trial, they would essentially have to have such damning evidence against the president that is a Republican president to essentially turn on their Republican president, which would not be good for the Republican Party or the Republican senators. In fact, you could probably argue that the only way Trump will probably get fully impeached is if Democrats control the House and the Senate, which means all of this could be going on through the next election. That is, of course, if Donald Trump wins the next election. And then at the end of the trial, a super majority of the Senate must actually vote to kick the president out of office. In other words, this is gonna take a really long time. This actually has some far-reaching consequences for the market and China, though. But actually, not even just China, but it also risks continuing to polarize our already pretty divided country. In fact, after reading both the Wall Street Journal and the New York Times, I keep seeing references to Alexander Hamilton, who says that there's nothing more polarizing than an impeachment process. All right, so now we have some basic background on what the allegations are, how the stock market reacted to the initial allegations and the initiation of this process. Then we now understand what the actual process is, and we realize it's probably gonna take a really freaking long time. And now, what does history tell us about how the impeachment process can affect the market, and what expectations should we have for the market today? Well, first things first, I think it's helpful to say that Market Watch sees the odds of impeachment, that is the odds of the House actually passing the impeachment or the beginning of the trial for Trump, at 45%, which is actually pretty dang high. It's a lot higher than I thought or expected. But according to the Financial Times, what historically happened at the last two impeachments we had? Well, in 1973, the impeachment process against President Richard Nixon began, and the market was plummeting and plummeted even more during the impeachment process. In fact, the United States started going into recession, and the Dow and S&P fell 40 and 42% respectively during the impeachment process. Now, unfortunately, the Nixon impeachment might not be the best example because a lot of things happened around 1973. In fact, in 1971, the United States left the gold standard, which led to a lot of inflation and ultimately a recession. But not just that, in 1973, the same year as the impeachment process began, right before Richard Nixon ended up resigning, in 1973, we have the Arab-Israel War that broke out in October of 73. And as a result, the economy suffers a massive oil price shock, sending oil prices through the roof and creating gas shortages in the United States, all coming together to lead to a pretty ugly recession. Interestingly though, after stocks dropped 40 and 42% in 1975, the stock market almost immediately regained 38%. In 1976, the market rose another 17.9%. By the way, in case any of you want a link to the articles I'm referring to, they are linked down below. And no, they're not affiliate links, but yes, you have to scroll past my course first. So unfortunately, the Nixon impeachment isn't really helpful. But what about the Clinton impeachment in 1998? Well, the day the Clinton impeachment began, the S&P fell a familiar 4.9%, or roughly 5%, which is almost the same thing that happened yesterday when the impeachment process was announced against Donald Trump. Very interesting similarity, but it gets even more eerie because At the end of the day, when the Clinton impeachment process was announced, stocks ended up down roughly between 1% and flat, which is pretty much the same thing that also happened the day the impeachment was announced against Donald Trump yesterday. Well, so far that sounds pretty similar to what happened with Trump, but during the Clinton impeachment, the market did experience a pretty nice bull market. Unfortunately, I can't say the same about our market today, but continuing to look at Clinton's impeachment from the day, according to the Financial Times, that Clinton was impeached to the day that he was acquitted, that is, not convicted, not removed from office, the Dow Jones went up 20% and the S&P rose over 28%. So unfortunately, I don't know that looking to history is really going to help us, but what will help us is recognizing that what happens every time talk with China gets tough. The market turns red. And I can tell you this much, an impeachment process against Donald Trump is not going to look good in negotiations with China. Because in my opinion, Donald Trump has the best leverage over China if China believes Donald Trump is likely to be reelected. Now remember, this is not a political opinion. I'm not saying I want Trump to be reelected or not elected. I'm simply saying that Trump has greater leverage against China if he doesn't have these issues going on. So the more of these issues happen, the more tenuous trade talks are going to be with China, and unfortunately, the more volatility we should be expecting in stocks, foreign index funds especially. I think those are going to see a lot more red. Any kind of foreign markets, I think, are going to suffer a lot more than US markets, but even US markets will be volatile. And we're going to see a lot lower real estate confidence. A lot lower real estate confidence usually manifests as builder confidence going down and less new construction. I also think this means we're going to see a lot more volatile US real estate sales data, but now I'm going to switch the script on over to CNBC and reference their article where they say, hey, you know what? The economy is unlikely to see serious damage if Trump actually gets impeached. In fact, a writer over at Arc Digital says, hey, you know what? The market might actually be pricing in a Trump impeachment because there's really no surprise. According to this writer, we all already know what kind of person Trump is. This is the opinion of the Arc Digital writer. I'm simply trying to relate this to the marketplace, and if the marketplace isn't going to be surprised at allegations at Trump, then really all we have to worry about is what's going to happen with the China trade negotiation. Now, Donald Trump said in an interview with Fox News that the market will crash if he gets impeached, but this could be a defense tactic. It makes sense to say that, especially since he sees himself as the person championing the current market. So now practically, what does this mean? Well, if we do see more drama with China as a result of this new impeachment process, expect possibly lower mortgage rates, because as the Federal Reserve watches more drama unfold in the marketplace, they're more likely to reduce rates and lower rates at the Fed while they're not directly tied into mortgage rates. Usually if the Fed comes out a little more dovish and starts reducing rates more aggressively, mortgage rates tend to follow that path downwards. Now, mortgage rates held pretty stable the last time a Fed just reduced rates, but that's because the markets already anticipated that. But what I'm suggesting here is that mortgage rates for houses could come down more if the Fed responds more aggressively to changes in the marketplace. Now, yes, I've gotten this question on Instagram a lot. Yes, I am tracking what the Federal Reserve is doing in their overnight operations, specifically related to the repurchase market, the repo market, but I don't have a comment for you on that just yet. So if I were to tie this all together, I think what we're experiencing here is honestly a lot more of the same. The China trade conflict is going to be first and foremost what everybody's looking to. The economy still seems to have growth and steam in it, but there are problems lingering and cracks starting to show in the marketplace, and we really want to pay attention to these cracks. So as usual, my advice stays consistent. Focus on index funds that are diversified. Consider investing in things like a Wealthfront index fund, even though you're going to have some exposure to the foreign stock market. I do like Wealthfront's index fund of index funds, especially if you invest up to the limit where you're not paying Wealthfront any fees, which I've talked about in other videos. And of course, you can continue to throw money into Vanguard index funds, in US stock market funds, or even a certain portion of bond index funds with Vanguard just to diversify your risk a little bit. But as far as real estate is concerned, I'm going to use this bad news to my advantage. And in all of my negotiations with sellers, I'm going to be using this drama to keep buying below market value real estate. Those wedge deals that I teach you how to scoop up in that real estate investing course, so you can learn how to boost your net worth dramatically when you start buying these quality properties. Now, I oftentimes get the objection that, oh, well, I can't find any good deals in my marketplace. If people are flipping in your marketplace, you can find good deals and negotiate good deals in your marketplace. You just need some help strategizing on how to do it. I will say though, I don't think Trump will get kicked out of office, at least until the election. If he loses the election, well, then he's obviously out of office. If he wins the election and Democrats control the House and the Senate, then I might start worrying a little bit more about a president actually getting kicked out, at which time I would expect dramatically more volatility in the marketplace. So I'll definitely be keeping an eye on this impeachment process, but there you have my take on how the market is going to react to the Donald Trump impeachment process. Follow me on Instagram, and until next time.